Hello ladies and gentlemen, thank you for joining Group 1 for our American Barrick presentation. Here is a quick overview on the topics we will touch on. American Barrick is a Toronto gold mining company founded in 1983 and quickly turned into a Canadian powerhouse, becoming the 8th largest publicly traded company in Canada. Barrick's equity market capitalization grew from $46 million to $5 billion in 8 years' time. Early success led to rapid expansion with almost annual acquisitions and explorations that led to a discovery of mass amounts of gold reserves. The success of the company can be credited to their successful hedging program, acquisitions, financial investment vehicles, and leaders. Gold value chain. These are the 4 processes for mining gold. Exploration, which consists of drilling and taking core samples. Acquisition, which is buying the land or company where you want to drill. Develop, mine, and process, which is getting the mine shaft accessible and making it stable enough to extract gold. And lastly, selling the gold and making a profit. Barrick's competitive advantage is what led them to becoming the world's largest mining company of their time. In mining, it is difficult to gain a significant advantage, but with proper research and exploration, the firm discovered a large amount of gold. Since the company was profitable and investors trusted them, Barrick was able to acquire some of the richest gold mines during their time. The firm had many active mines that yield hundreds and thousands of ounces of gold that were able to liquidate for financial capital funding. One significant advantage of gold mining companies is that they have little to no expenses for marketing and distribution, since there has always been a market for gold. Once the gold was mined and processed, it could be sold immediately. With a conservative approach on how they would finance their business, Barrick kept a tight control on their costs and maximized efficiency by selling forward contracts and put options, which minimized financial losses. By hedging, Barrick was able to protect the interests of the company, investors, and mitigate against market fluctuations in prices. When it came to capital financing, Mr. Monk believed in having a liquid balance sheet that offered flexibility and did not believe in issuing debt. Staying true to his beliefs, Barrick established the following: bullion loans, selling borrowed gold and repaying in gold, and the Barrick Collation Gold Trust. This was a low-cost funding strategy for development. The trust would pay investors 3% should gold prices fall below $399 and pay 10% if prices rose to $1,000. Investors would benefit from increased volumes and increase in gold prices. Finally, the index Eurobond was introduced in 1987, which paid $26.16 in annual interest payments. This flexible financial investment vehicle allowed for investors to liquidate their assets at any point in time for cash or gold. Both investment vehicles allowed for both the lender and the borrower to benefit. And it also allowed the lender to liquidate the gold should the firm go bankrupt. Barrick's team was able to protect the firm from price risk by entering in forwards contracts, options, and spot deferred contracts. Spot deferred contracts was Barrick's most successful hedging contract. As the seller, the firm had the option to deliver gold on the forward date or sell the asset if the market price was higher than the forward price, allowing the company to take advantage of rising gold prices. Forward contracts. This type of contract minimized the downside but also capped the upside potential because they weren't in a contract. Options. Buying puts and selling calls allows Barrick to capitalize all the increases in between the buyings. Earnings are still limited though. The overall success of the company came from capital gains, hedging strategies, which allowed for the firm to gain a significant advantage over its competitors. Barrick's financial success comes from a long history of conservatism, innovative financial strategies, and an unremarkable hedging program which led to the future success of the firm. Because of its historical success, we agree that the firm should hedge the 0.8 million ounce production windfall as the company can financially support it.